Hello traders, and welcome to the Stock Goodies Chart School. The AD line will be positive when the close is in the upper half of the high-low range for the day, and it will be negative when in the lower half. Now what does this mean? Okay, our last lesson on OBV has to do with where the close is. Is it higher or lower? So this day, the close is higher than that day. And the volume was huge. So the OBV would have gone up. The reason AD did not go up and instead went down, okay, starting on this day, the stock closed just below the midpoint of the high-low range for the day, okay? This day it closed a little bit above. But the downtrend in the AD line started on this day because the stock closed right here, which was very close to the bottom of the high-low range for the day. So the AD line starts going down. Okay, why this is important is it takes more into account of where the position of the close is relative to the day's action. Okay, and that's important because whenever you see a lot of tall upper wicks, like this shooting star right here, which closed at the low of the high-low range for the day, even though the close was higher than this day right here, okay, and volume was pretty average, the AD line took a real big hit to the downside that day, okay? And that shooting star also signaled the top. But as you can see, the AD line right here started to predict weakness in the stock because the close, whenever you see a close at the low end of the day's range, that even though the stock goes up, that's a sign of the bears are winning the day. Okay, and it took a couple of more days, but finally the shooting star showed up and the stock went ahead and went down. Now, this day was a close at the low of the high-low range. This day was below it. This day was also a close very close to the bottom of the high-low range. And then this day here, the close was at the top of the high-low range for the day. It was an up day over that day. Volume wasn't that big, but the AD line did start to uptick. Here is a great example of how you can see such a major divergence between on-balance volume and accumulation distribution. Okay, OBV fell like a rock for two reasons. First of all, the close was much lower than this day's close. Not sure why it gapped down so big at the open, but it could have been bad news or a bad earnings report. Okay, and it had huge volume, so OBV falls hard. The reason the pink AD line is up is basically because of the position of the close in relation to the high-low range of the day. Okay, the bulls actually won this day by closing it so close to the top of the high-low range for the day. In other words, they saw a buying opportunity and bought the gap down. So when you see a divergence between OBV and AD, there is a reason behind it. Look especially for the position of the close. Okay, and the volume is very important too. An uptrend in the AD line indicates that buying pressure is prevailing on a regular basis, while a downtrend of the AD line indicates that selling pressure is prevailing. Also, bullish and bearish divergences serve as alerts for potential reversals in the price trend. So let's take a look first at how the AD line is confirming an uptrend, then a downtrend, and then another nice uptrend. Okay, that's perfect. That's how it's supposed to look. But what you need to watch out more for are the divergences, either bullish or bearish. Here is a great example of a bullish divergence between the pink AD line and the price of the stock. Let's start at the beginning here. From this point to the low, it's tracking perfectly. Up to the high, it's tracking perfectly again. But once we get to the bottom on the AD line, it starts to move up well before the stock price actually starts to move up. And the reason for that is in this area right here, the closing price must have been in the upper range of the high-low range of these days in order for the AD line to go up. And what this may signal, a bullish divergence where the AD line moves up before the stock price moves up, may signal a rise in the stock price well before it actually starts to move up. Now let's take a look at a bearish divergence where the pink AD line starts a downtrend a couple of months before the double top breakdown and the fall of the stock price. Starting at the beginning, it appears to be tracking very well. This high here is lower than this high here, just like in the stock price. This high is a little bit lower than here. Okay, then it showed some real strength on this uptrend. Okay, but right here, this is where the divergence begins. Okay, AD line starts falling hard. Okay, and that was well before the stock actually broke down and broke all of this support. Okay, this was the last level of support. Okay, and then it went up pretty good to set the high here. But when it broke below this level of support, the AD line crashed, and that was the beginning of the breakdown of all of this support and the beginning of the decline in the stock price. So whenever you see AD starting down and the stock is going up, that is actually a sign of weakness to come. The AD line is an indicator based on a derivative of price and volume. So this makes it at least 2 steps removed from the actual price of the underlying security. So the money flow multiplier does not take into account price changes from period to period. And as such, it cannot be expected to always affirm price action or to successfully predict price reversals with divergences. So sometimes there is a disconnect between prices and the indicator, like shown in this chart. GCI was in a serious downtrend, while the AD line was in a pretty serious uptrend. Okay, so sometimes the AD line simply does not work. And as with most indicators, it is very important to use the AD line in conjunction with other aspects of technical analysis, such as the momentum oscillators and chart patterns. It is not to be used as a standalone indicator.